tell us what you think. We're at about $111,000. The upside, the downside from here?
Bitcoin and cryptocurrencies like Ethereum are super sensitive to monetary policy. So I think that September 17th is an important catalyst. Crypto typically does really well in the fourth quarter. So I think Bitcoin can easily get to 200,000 before year end. I know it's a big move. It's almost a double. But that's also
almost
going to be
a double from here. Let's just hold on. Let's just take a quick pause. A double from here. So everybody's listening to this. We're at $111,000, and you think we by Christmas time, effectively, we could be at 200,000?
That's right. One of the reasons Bitcoin stalled this year is the Fed's been on pause for 9 months. That pause all year, if you look at an easing cycle, that's only happened 2 other times, in 1998 and 2024, where the Fed began to resume cuts in the fourth quarter in September. Equities do really well. As you know, crypto is beta to equity. So I think it's going to be a very strong fourth quarter. Small caps should also rally, like IWM, but that also is really bullish for Ethereum, which is highly linked to small caps.
So you are seriously bullish into the end of the year at this point, given these rate cuts. You don't look at it as bad news is good news, but therefore the good news can't be that good situation.
I would be more cautious, Andrew, if we didn't encounter so much skepticism about stocks. I think year to date the S&P is up 10%. As you know, when you look at a pretty good measure like AAII, net bulls less bears, it's been negative for 5 weeks. So at all-time highs, investors are bearish, and we find that skepticism among our institutional clients. So I think most are kind of bracing for a defensive view between September and year end. That's why I think that the stock market will surprise to the upside.
I want you to weigh in, if you could, on this debate we've been having, or I should say the debate maybe the White House is having over these jobs numbers and what it portends for the economy and therefore what it portends for the Fed.
We can see that Fed fund futures jumped from roughly 2.3 cuts by the end of this year to almost 3. So on the heels of that jobs report, the bond market essentially is saying that the labor market is now deviating further from the Fed's target than inflation, and therefore justifying actually one additional cut. So I think that makes sense to me, because we know inflation, and that August CPI gets reported this week, may be elevating, but that the markets are going to begin to view that as transitory. Whereas the weakness in the labor market, as you know, once it begins to weaken, it's very hard to reverse that momentum. So I think it's important for the Fed to intervene quickly. To me, if I look at what the bond market's pricing, which is now essentially 3 cuts and the Fed is talking about 2, the bond market is saying the Fed is behind in terms of how they're perceiving these changing conditions. And so I think on the 17th, when the FOMC makes its rate decision, I think there is a chance the Fed's response to that, and if it does, it's going to be good news, because the bond market is going to take comfort from the Fed at recognizing the labor market's weakening.
We had Tom Lee on the broadcast. I don't know if you saw this earlier today, and he effectively said Bitcoin at $111,000 is headed to $200,000 effectively by Christmas. What do you think of that?
Well, most of the equity analysts that follow our stock have target prices for Bitcoin, and they're all north of 150. Bitcoin represents a digital transformation of capital markets. And so the more people know about it, the more they get educated on it, the more companies embrace it, the higher it goes. You can't make any more of it.
Right. That may be all. But in terms of just what you're seeing in terms of flows and whatnot, that would get it to $200,000 by the end of the year.
Yeah, great flows from the ETFs. BlackRock is showing record numbers. Our companies raised $19 billion this year.
Right.
All of it went into Bitcoin. We just announced $217 million of Bitcoin purchases this morning before I walked onto this set here.
Wait, 217 million this
morning? 217 million, just slightly less than 2,000 Bitcoin. Our first buy, and we were the first public company to buy Bitcoin, we bought $250 million of Bitcoin, and that was like all the money we'd come up with in 30 years.
Yeah.
And this was just a short week, 4 days.
Okay. You are effectively a levered bet on Bitcoin. That's what this company has become.
That's correct.
Okay, so the question is, on the way up, it would be it's fabulous, right? Because everything becomes, multiplied. What happens on the way down, if there is a down?
Well, a lot of investors, they have to buy equity, and so we offer Bitcoin-backed equity, or they need to buy credit, and so we have 4 Bitcoin-backed credit instruments, preferred stocks. So the ones that are risk averse, that want the exposure, are buying the credit, like Strike, which has got the upside with some downside protection. The ones that are buying the equity want 2x Bitcoin. They want more volatility, they want more performance, and they see it as a more efficient way to get that exposure. Turns out that 99% of the money in the world is mandated to equity and credit. Most of these professional investors and most of these passive funds, they can't buy the underlying commodity even if they wanted to.
Right. If in fact, even if there was a crypto winter, and we'll call it a winter because that suggests there's still a potential summer again. At what numbers and levels does it become complicated at which you start to have to sell things?
You know, we constructed a pretty bulletproof balance sheet. I would say we have a PhD in leverage by now because we lived through the last crypto winter. We went from 6,000 to 16,000. We were buying Bitcoin at 16,000. We used to use senior debt, and we had some margin type loans. We rolled out of that to converts, and this year we really have started to reallocate to preferreds. And preferreds are the best kind of leverage because they never come due. So I think we're fine right now because substantially our leverage comes from preferred stocks rather than from debt at all.
I did note that it's good to see you, that 10.5% rate on youth unemployment, and wondering if there's a mismatch here between what skills are needed for our AI future and how kids are graduating right now. What do you think?
Well, there's definitely a mismatch. You're going to see a number of sectors that will shed jobs due to AI. You mentioned a few of them. One additional one to look at in terms of losing jobs will be the fulfillment sector, warehouse fulfillment, e-commerce. If you look at the number of jobs employed in warehouses and fulfillment by Amazon, Walmart, Target, Costco, you're talking about well over 2.5 million jobs just in the United States alone. That's going to be under very significant pressure, both from software AI, but also as we get to robotics, with Tesla, Future AI, many other companies coming into the space, Amazon, Walmart, and others already experimenting with these devices, and you'll see further cuts in the hundreds of thousands there in e-commerce and fulfillment. On the other hand, Sarah, to your point, there are sectors that we're going to see job growth because of AI, and there's certain skills that we definitely need to have folks learn. One of those to start off is cybersecurity. There's 500,000 missing trained people in America for 500,000 open jobs in cyber right now. And AI is actually increasing the need for cyber workers.
But this really gives SpaceX more broadly and Starlink an ability to give you direct to your mobile device connectivity with its satellites, but also from mobile to mobile. This is important for the growth story that we're seeing between Starlink and SpaceX. But what's sad is you are seeing perhaps the views that EchoStar was going to be a key challenger when it came to an offering in the mobile space. The fact that it was going to rival the likes of an AT&T or Verizon, that's not going to be clear anymore because clearly they're having to offload what was this prized spectrum. The reason they're offloading it is because back in May they started getting an investigation by the FCC. Look, this is a company that's on the brink of bankruptcy, and now you see its bonds soar, its shares soar, because basically they've been forced by Trump even involving himself as well, but being forced by regulators to start selling off some of this spectrum that it bought at pretty bargain basement prices previously.
Welcome to the Crypto Teacher. Don't forget to like and subscribe to the channel. And you know I come back with that video just to make you think. And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And again, I want to thank those who made this birthday special, all the shout-outs, and then, of course, especially those Cash Apps. Thanks for all the love. Let's get into the video. And we have Tom Lee giving us another prediction. With the Fed rate cuts, Bitcoin could hit 200,000 by year end. But when we look at the bond market, this rate cut is already priced in. And then on top of it, the catalyst that we do have are these altcoin ETFs. If not that, Bitcoin is going to pull back further, not move up. So the only thing we have to do is stay focused on the actual indicators. And Michael Saylor was asked about Tom Lee's prediction, and of course he goes back to his talking points. Also asked about all that leverage, and of course again he goes back to his talking points. Eventually all this leverage comes to an end. And remember, the crypto teacher tells you it will not end well. Remember, Bitcoin is a narrative to get us moved over to this fourth industrial revolution. Now we have AI adoption creating layoffs, and they haven't even gotten started yet. And we know all the technology that they have. They can replace probably 30 to 40% of the population today. I was speaking to someone in the medical field, and they was telling me that technology cannot replace them. And of course, I sent them the proof. And of course, they had nothing to say. Remember, guys, if you're a worker bee, you're not looking at all this technology that's been ready 10, 15, 20 years ago. And all you have to do is go back to the C word and look at all the technology that we used during that time. That technology was over 10 years old. And remember, the crypto teacher told you. But again, technology can be used for good or evil. It's definitely going to create more jobs. And if you're just one person trying to start a business and you normally need others, you're not going to need that when it comes to AI. So that's the reason why it's so important for you to get back to the creator, so therefore you can start creating. And remember, the crypto teacher told you. Now we have SpaceX buying EchoStar Spectrum. And of course, the selling point is just in case you're in a dead zone, anything happens, you can use the satellite service. But no, this is how cell phones started, just in case. They want us off the towers and off the grid, so therefore the machines can use it. And remember, the crypto teacher told you, they're going to leave us with the spotty service. And then we have stocks that are all-time highs, but we know the numbers don't match. It's all going off valuation. Why? Because the Fed printed 80% of all money existence in 2 years. They had to put it somewhere. And we know a lot of the activity that went on was illegal. But of course, the sheep stay asleep and they focus on things that don't matter. And we know it's just in time for football season. And we're going to have a whole lot of events going on. And we always get that black swan going towards the end of the year. And remember, the crypto teacher told you. And then we have the Fed will cut rates. But the question is how much? And because inflation is moving up, and then also we're going to have the dollar taking a beating. We know Trump has to get us over to this level playing field. And in the Patrons, I gave you proof. And now you get to hear it out the horse's mouth, the agenda. What I've been saying from the beginning. If you know the plan, nothing, and I mean absolutely nothing, surprises me. And then also, if you're part of the Stock Patreon account, I put in a newsletter. I put something also in there that you're not going to hear from social media. You're only going to hear it from the crypto teacher. So when you see these agendas, you know what they're for. And of course, that's to move us into this fourth industrial revolution. And remember, the crypto teacher told you, because he knows. When it comes to the NWO, it's all planned out. You have a wonderful day.
It certainly doesn't seem this way that there is an adoption slowdown when you go through earnings calls, when you hear what companies are saying, but there could be a difference in what they're broadcasting versus what is actually going on in terms of dollars spent. What's your take on this? Because there's always that concern that there's a pull forward, that the expectations were just being bloated to begin with, and that it will catch up with this trade.
Yeah, I think the tough thing is don't confuse what stock prices are doing with what's actually going on fundamentally, because those two things can be completely different for short periods of time. And that's what you have going on right now. You were talking earlier about, the Fed cutting rates, starting again that cycle on September 17th, and that's driving these stocks up. But if you listen to what is actually coming out from these companies, it paints a slightly different picture, right? Where, remember, there was an MIT study that came out that 95% of companies weren't seeing any, improvement from their spending on AI. Then you get to company actions which matter more than these surveys. And you go, all right, Meta, which has been absolutely killing it with their Llama models. Now there's talk that they're going to work with either Google or OpenAI to get Llama 5 out. And after spending like, Major League Baseball pitcher type salaries for AI researchers, they've probably now restructured their AI team at least 4 times in the last 6 months. You look at what's going on with Apple, right? They announced all these AI features for Siri in 2024, but it'll be probably 2026, and they're going to have to work with OpenAI or probably Google following this antitrust ruling to get those features out. So you are already seeing this, and over the weekend it came out that OpenAI has sort of pushed up their revenue forecast for 2030 by about $26 billion to $200 billion. But to get that revenue increase of $26 billion, they're going to have to burn $85 billion more in cash. So the data points are definitely there, but we're in this business to make money. So you have to go, all right, well, do the fundamentals matter right now? Or is it the fact you're going to get even more easy money? The 10-year yield's going down to 4%. And so this market, much like in 2021, will keep going up right up until it doesn't. And so I think you have to look at that. And NVIDIA missing on data center revenues. And you can say, yes, but the growth was so high and all this, but they missed. So that should give you another data point, and you throw on top of that Dell or Marvell, or the fact that Avago's got more ASIC revenues because companies want to cut their costs. Those all speak to the same narrative. So don't confuse the actual data with what the stock prices are doing.
I think the equity market might go into a bit of a correction if the Fed does cut by 50. You have lots of companies, lots of countries who have pledged a big investment into the US. This is yet to be seen. So the whole of the equity market is moved by these tech companies. So are they going to have enough profits to really move the market up? There is a big concentration risk on the US market. So that's really something we want to watch carefully. We might have the fact that the economy is slowing down. That's really taking over the fact that the tech companies are pushing the market higher. Yes, that's an opportunity we will use to reposition our portfolio. We have gone with lots of cash now in our portfolio. We have been hedging in our portfolio as well since the month of March, expecting some kind of correction coming. The valuation are very high on the US market. They pushed lower by the loss of confidence in the US institutions in general. So obviously you have the Fed threats by Trump. That's very annoying, very puzzling for all the watchers. You have also the potential on the labor institution, also with the labor data that's going to be. Are they going to be really independently released, or are we going to have some loss of confidence also? All of this is pushing the dollar lower, and also this loss of confidence in the U.S. economy is pushing the gold higher. We have seen the gold going over 3,500, and that's becoming a new support now.
Going to a different economy, and we're going to be learning more about that as we go, but clearly we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets. Now,
it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Crypto Teacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team save the village. Part 2. King Joshua and Drama Team York. From COVID Stories 3, Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get Part 1, Part 2, and Part 3 of this series. It's time to re-educate Generation Z.